On the rewatch. Appreciate y'all. And for the people that are here, let's go ahead and get into it. So this is the Bybit platform, right? Easy enough. You just search Bybit, Bybit, and then you can go ahead and click there. It brings you to their homepage. Now I use Surfshark VPN. It's pretty cheap, and I use Spain as my host country, but it's really any country that allows you to sign up is what you want to be using. So before you log into the platform, here you just got the tabs on top. So when you create an account, it's pretty simple. Put in your email, a few other details, and you can get signed right up. And then after you're signed up on your account, you're gonna want, or at least what I did is I went here to the buy crypto tab, and then crypto deposit. And then it gives you right here your options of what you want to deposit, right? So for me, I had some funds in my what account was it? I think in my Coinbase account. I had some Solana, so I just sent over some Sol. I believe it was. Was it Sol? So Solana, boom. All right, so Solana is currently unavailable, but whatever you choose, right? Bitcoin, Ethereum, whatever it is, let's just say ETH. And it's also pretty cool because it gives you the chain type. So if you don't want to send it on Ethereum's mainnet, you can send it on a layer 2 like ZK Sync or Optimism, Binance, or just Ethereum's regular mainnet. Deposits will be auto-channeled to and can be viewed under your derivatives account. So just something to be aware of, but that's doesn't really matter. Okay, so you pick your coin that you want to deposit. Let's just say we're going to do Ethereum. You acknowledge this here, and then awesome, boom, you're good to go, right? You got the address that you're going to send to. You go into whatever platform you're using, whether it's MetaMask, whether it's Coinbase, whatever it is. You send your Ethereum to this address, and then within a few minutes, it'll get delivered. And then you can put it whether you want it to your derivatives account, which is like your futures account, or you want it to your spot account, right? So I'm trading futures, so derivatives is fine for me. And then boom, you would be good to go. So hopefully you guys are with me so far through those steps, right? It's didn't get too deep there. So again, you sign up, make sure you have your VPN turned on. Once your VPN is turned on, you come to the Bybit website, create your account, go to buy crypto, but really you're going to click on crypto deposit here, click on the type you want to deposit, and then go ahead and send that over. All right, so once you have that going on, then this platform is the derivatives tab, right? So I'll actually go there from here. So I was on crypto deposit. I went ahead and deposited my crypto, and then now I want to go to the derivatives tab. And just for the sake of doing it, we'll go over the few other tabs here. So you have the different type of markets tabs here, which is going to be the spot, I believe. So you have your USD perpetual futures. So perpetuals are the are futures contracts, right? So it's in perpetuity, which means there's no expiration date. So you got your perpetual futures. You have your inverse perpetuals, which I don't use, but I believe that's just denominated in that own token, right? So meaning that you need Bitcoin to trade Bitcoin, you need Ethereum to trade Ethereum, right? You need XRP to trade XRP. Compared to USDT, you can trade all these different things you can trade Bitcoin with USDT, Ethereum with USDT, so on and so forth, right? Inverse futures, same deal. USD perpetuals, same as USDT, just a different stable coin. And then obviously the options market as well, with the dates that you could set for the different calls or for the options you want. So I'm not too well versed in any of those things other than the futures derivatives. So that's what I'm going to be focusing on and kind of touching on. All right, next tab, trading. So if you actually just click on that trade tab, it'll bring you here. This is spot accounts, spot trading, leverage tokens. So the leverage tokens can sometimes be useful if you don't want to do futures trading, but you still want to use a little bit of leverage, right? You can buy like, a 3x long, keeps disappearing on me, like a 3x long Bitcoin or a 3x long Sol, 3x long XRP, so on and so forth. Skip over to earn. I never use this tab, but it looks like this is, you can do a little like passive yield farming here. NFTs, don't use that tab either. All right, so derivatives. So yeah, no worries. So yeah, let me just hover back over that. So it's showing, okay, so 3x leverage long, right? So if Bitcoin goes up 10% and the asset is 3x leverage, how much do you think it went up? Instead of it going up 10%, it went up 30 exactly. Yep. So that's just, but it does it automatically for you, right? So if you're going to trade this BTC 3L, so let's go ahead and click on it. Boom. Give it a second here. It's working in the background. Leverage tokens, acknowledge it. Good to go here. Alrighty, so you can see on this chart, go on weekly, daily. So the chart's sitting at $2.86, right? So whatever move that Bitcoin makes, it's just going to be 3x that time. So it's really just, it's pegged to the price of Bitcoin, but because it's 3x leverage long, it doesn't show those actual prices. So that's really all you need to be aware of. No, it's not. The price of the token isn't what's leveraged. It's the movement that the token makes, right? So like, I don't know if you like QQQQ and TQQQ. So T as in Teddy, QQQ, and just regular QQQ. That's like the same type of deal, like with like leverage tokens. It's just taken into account of however much percentage it moves. So it's not going to be the same price as like Bitcoin's. It's not like, oh, it's 3 times Bitcoin's price, but it moves with 3 times Bitcoin's like volatility. So well, it goes down 3 times as fast, right? Just like it goes up 3 times as fast. So if you go if Bitcoin really moves 10%, then the 3x long would be a 30% move, right? And then so whether it's up or down, it's still the same case. Well, this is just spot, right? So you're trading spot, so you can only lose what you put in. You know, you're so you know I don't want you to get too confused there. The only difference is just that it'll happen quicker, right? Instead of a move taking, you know, instead of it taking a week to for you to lose 30%, it could take only a day, right? Because if it's a 10x leverage or 3x leverage token and it moves up 10 or down 10% in a week, it really went down 30 that week. But then if it moved 10% a day, it really went down 30% that day. So it's really just it just gives more volatility to the asset. Mm-hmm. Yep, that's definitely true. Yep, because it's on spot, you know, you can just hold on to it, and as long as you're comfortable holding on to the asset for extended time, then you know you're more than fine. So it's a way for people that are trading spot to get leverage, you know, get leverage into their system. All right, so going over to the derivatives, so we'll do USDT perpetuals. And again, just to break that down, USDT, right, is just a stable coin that we're trading in. That's our denomination. Bitcoin is the asset that we're trading, right? A perpetual futures contracts, it just means it's a contract that's going to be settled at some point in the future. And it's perpetual, so it means that it doesn't have a specific date on when in the future, unlike, let's say, like an option trade, right? And now I'm just going to go over this to get us comfortable with like this, the way this chart is set up. So on the left hand side here, you can change the different assets right here, this little switch tool. But I usually actually just click on the name of it. So same thing, either one of these, and you could switch. So let's say we wanted to switch over to Ethereum or something, you know. Okay, so basic enough. We got the main price right here, 24-hour change. And I believe you can customize these as well. Just so keep that in mind as well. So you got the 24-hour change. Obviously, I don't need to, 24-hour change, 24-hour high, 24-hour low, 24-hour turnover into USDT. So how much was traded over a 24-hour period. Funding rate. So the funding rate is slightly, some people put a lot of weight into it, others don't. But basically, essentially, the funding rate is the price currently positive or negative as far as the funding fee. So the funding rate is 0.0082%, and that means that the longs are going to be paying the shorts to keep that position open. So whatever the funding fee you're going to pay, you see it right there at the bottom, is the funding fee is the position value multiplied by the funding rate, right? So $100 multiplied by whatever the funding rate is, that's how much you would pay as a funding fee. Okay, so it's exchanged between the buyer and seller every 8 hours. So you'll have that countdown right there. It's 6 hours and 39 minutes left. At the end of that 6 hours and 39 minutes, that's when you would take your position value, multiply it by, or you're not going to do it, but the platform's going to do it. They're going to take your position value, multiply it by the funding rate, and then pay out the funding fee. So, and then as I was saying, when the funding rate is positive, then the longs are paying the shorts. And when the funding rate is negative, the shorts are paying the longs. And if you don't get what I mean there, like shorts paying longs, right? There's a zero-sum game. So if I'm betting to go long and the funding rate is positive, that means most of the other people are also betting to go long. So you have to pay to keep that open to the shorts. You have to pay a fee to the people that are short to keep open your long positions, especially if you're using leverage. All right. So I'm actually not familiar with what this copy trading tab does. We can click it just to see what it does. But I don't use the copy trading tab. We'll let that load up. I'm assuming it just like pulls data from something for you to copy what other people are currently trading. Let's see here. A few walkthrough videos if you need them. This little book. Boom. All right, and then now we're moving back to the left side again. So I don't actually use this chart. Like I don't do any markups on this chart. Usually what I'll do is I'll have my regular chart and I'll already have marked in, everything I want to trade and whatever positions I'm looking at, right? So this is Bitcoin on the 5-minute, but it's also Bybit, right? So I'm looking at the Bybit platform as well as trading on the Bybit platform. For me, I just get a little too clustered when I'm in here and I'm looking at this and then I'm trying to do something, on this side. I personally just get a little flustered with it. So I like to kind of have my idea thought out here. Like, okay, we found a local bottom right here. We've been on a little bit of an uptrend with this pullback here. So even though it's only a 5-minute chart, which I normally trade on higher time frames, if I ran like a fib there, we did get a bounce off the 0.5. So I would wait to see if I'm putting in a short right here at 29,650. That would be an area of interest for me to short, and I could close it out depending, I'd need to look at a little bit more for my trade thesis, but like if I'm just like pulling this up right now, that would be my short entry. And then maybe say, here, let's put a price target on it. So my short entry right here. And I'm looking for it to roll over, right? So roll over in the sense of like it comes back up here, doesn't break above here, and kind of drools back down to here. All right. And then I would probably have my stop loss right above here, right above that this high here. And so let me grab this. Boom. All right. If you're not the best trader, then maybe you would wait and you would put your entry closer to where your stop loss would be, right? So on this specific example, I would have my entry if we come up here and my stop loss really close above it. Now this is all just hypothetical. I just saw this little formation on this chart. This is not like a serious trade. This is just kind of ideas of how I would enter these trades. So I see this little bit of a retrace and we got a pop, but we didn't bounce high enough. We couldn't get it back above this level, this 0.78. All right, and then we fell down. So maybe we curl back up. So I would either get my first entry here on the retest of the golden ratio with an added position or a close stop loss right above these, probably right at the bottom of these candles, which would be about 29,766. So I'm going to mark off all these so then we can put them into our trade. 29,777. And then we're going to have our take profit on the test down here at 29,485. All right, so now I have my idea set. All right. So now I'm just going to transfer this data that I have here over to Bybit, right? And again, what I'm looking to happen is I want to see a bounce up. We come and test up here, and then we come back down and we complete our trade and we get in on this bounce and we get out on the move down here. And then, like I said, if you're not super confident in your trade or with your trade setup, then set your entry where your stop loss would be. Right, so if that was the case, I wasn't super strong with it being here, I would set my entry here at this 29,739 with my stop loss right at the bottom of these candles right here. So this would be my entry, and then this would be my stop loss, and then with the same target down here. And so how would I set that up? So now I come back over to Bybit. The cool thing about this too, since I don't use this, you can actually just remove it and you can keep it off of there so you don't need it on there. But it's all depending on whatever you want to do. Okay, so I'm going to put it back though, just to not confuse anybody. Alrighty, so now that we understand funding rates, we understand the tickers. This is the same thing. This is just trading view, obviously inside of this browser. All right, order book. So order book flow, you're just watching here in the order book of how many people are buying and selling on this platform. So Bybit is known for having a lot of liquidity. It has a lot of volume on its platform. There's a lot of leveraged traders on the platform. So be aware of that when you're doing trades, right? You got to remember that trading is mostly just, well, not mostly, it is just people out there making decisions, right, with their normal emotions. Whether that's, if they're super bullish or they're super bearish, there's just people out there making decisions just like you are. So when you're looking at some of your charts and you say, hey, like it would make sense for us not to go above this level, right? So for example, it would make sense for us not to go above here, for us to come up, just retest and pull back to the downside. But you also have to remember that there's a lot of liquidity on this Bybit platform in specific, and there's probably a bunch of people, right? If this is the daily high, what's the day change? Today is the 3rd. See here. So yes, this is the high for the 3rd, June 3rd. We can see the date down at the bottom there. Oh, I forgot we're on the 5 minute. Let's change this to like hourly. $29.75. All right, so what I'm looking for right now is I'm looking for the daily high. Today is June 3rd. Obviously, we've been crashing. The downtrend started up here. So that was at midnight. 30,482. After this pullback, our next daily high, 29,863. So a lot of people, get rid of these for a second. A lot of people would have their stop loss sitting right here above the daily high. So it's something to be aware of, right? If you're trading on Bybit, the platform that has the most volume and the highest amount of leverage used on it, a lot of newer traders are going to be on this platform. So you want to be aware of that. Like if you get a wick, if you think a wick is going to stop you out, be aware of it's going to stop a lot of people out, and that's going to cause that little bit of a cascade. So maybe you put your stop loss just at like 1% past or deeper than that. So just something to always be aware of. Now we're going back to these smaller time frames again. Alrighty, and again, this was just for example. This is not saying, you know, we're taking this trade or anything. 100%. Nah, that's a great point, Jay. That's 100% right. You have people that try to do the you know, everyone's this is a big learning platform for people. It's where they first start out trading. So if a lot of people have the same trade setup idea and you have people with bigger accounts that can just kind of swoop in and knock a lot of people out through those ideas, you know, most of the people are going to do it. They're going to capture that liquidity is what it's called. Alrighty, so back to order book really quick. Obviously you have the price going on here, the quantity of whatever asset it is. This is Bitcoin, and then the total amount of that asset being traded up and down. This is the mark price, the gold price. So what happens is that the asset actually moves so fast, crypto so volatile, that instead of the listed price here, it usually moves based off this mark price. All right. So mark price is derived by index price and funding rate and reflects the fair market price. Liquidation is triggered by mark price. That's super important. Liquidation is triggered by mark price. So we're seeing the mark price of 29,585, and so it's about $20 higher. So, and that kind of ties into what we were saying. You know, if you have your stop loss sitting like right here at 29,744, but the mark price is trading at, you know, 29,544, 29,7555, whatever, like 20 bucks higher, then you're going to get stopped out. And then you're going to be upset and wonder why, you know. So just understand the way the mark price works here. It trades about $20 higher than the actual price. You know, take another something to take into consideration as you're going through it. All right. So that's order books, recent trades, speed of the order book. You don't need to change that. All right, now let's talk about actually placing an order. So actually placing an order. First things first, up top is the leverage. Now, I mean, you're all growing. You can do what you want. And, you know, it does get a little tempting. So I understand, you know, play around with everything. Just understand that the leverage is extremely just like risky, especially when you do good with it at first. It comes back to bite you in the butt. But I'm explaining here anyway. So when you click on this isolated up top here, all right, so you have isolated, long, and short. So click isolated, and then you have cross and isolated. So you have your trading account balance. When you're on cross, it includes your trading account balance. When you're on isolated, it does not include your trading account balance. It only includes the amount that is in that current trade. So if I have 3 trades open and each trade is open at $10 per trade, and I have a total trading account of $50, right? So I got 3 trades open. Each trade is 10 bucks. That's $30. So I should have $20 left in my trading account. So then I have a total of $50, you know, position essentially. Compared to isolated, if I have 3 trades open, each one is worth $10, I still have $20 in my trading account. And no matter what happens, only that $30, those 3 trades can affect the amount of money I have. Compared to cross, if you get liquidated on a cross position, it pulls from your account balance. So if you have 3 trades open and they all start going down and you already are, you know, you lost your $10 that were in each trade, they'll start pulling from your trading account. So I always suggest being on isolated instead of cross, right? So always, in my opinion, be on isolated instead of cross. Setting leverage at, you know, whatever you think to set it at. I wouldn't suggest going higher than 5, and definitely not going higher than 10. It just gets dicey when you're trading and you're trying to understand your stop losses. It's a lot harder to do if you don't understand how to use leverage. So 5, 2, 3 even is also fine. So we'll leave it on 5. Confirm it. So the biggest thing there for me is just isolated over cross. It's isolated is not going to pull from your trading account, right? Okay, so let's look really quick. What do we have set up? Look at a 1-minute chart. Lower high on the 1 minute. All right, so let's see if we can putting a scalp trade. We're just going to try to catch a bounce. This is going to be our stop loss, this wick under here. And this is going to be try to be our entry. right here, 29,558. So boom, that's our entry. That's our stop loss. And this will be our take profit. So 29,558 is going to be our entry. So we come over here. We are going to open a position, right? And we're going to do a limit order because we're putting in the price. If we're doing a market order, it would automatically just buy it at this mark price. But we're going to do a limit order. And again, that was 29,558. So the order price is 29,558. And the quantity. So the quantity is how much Bitcoin, which is really just how many dollars you have. So you can put in 50% of your account. It'll tell you the order value right here. Remember that this order value has a 5x multiplier on it right now for short and longs. Right? Order by cost. There we go. So you change this to order by cost. So that way you're not trading in BTC. It might just be a little bit easier for you to understand, right? So order by cost, USDT. How much you want to put in? We're going to do 25 bucks. $25 trade. And you can buy long with a take profit or stop loss, or you can sell short with a take profit or stop loss. The reason why I'm showing Bybit is so that you guys can understand how to short the market. So sometimes you'll want to go short, sometimes you want to go long, but it's the same process when you're setting up the trade. So this particular scalp trade, we're going long. So order price, order cost, $25 USDT. Buy long with take profit and stop loss. Now, if you're going to manage your trade, if you're going to be sitting there watching it and actively managing it, you don't always have to put in your stop loss. I like to do it though, just because I've had him trade move like crazy fast against me, and it's, for me, I just feel more comfortable with the stop loss in. But a lot of people don't put their stop losses in because once you put that stop loss in on the order book, people can see that you have a stop loss there, right? So people will know that you have a stop loss at 29,523, and they're like, oh yeah, let's just try to swing down and take out that price. So 29,523 on the stop loss. On the take profit side, 29,650. All right, boom, boom, boom. What's up, David? How are you? Good, my brother. We're just yeah. I mean, yeah, you're right up the right alley. We were just going over the Bybit platform because people were talking about knowing how to short the market, right? So you obviously you got to be using some type of trading platform to short the market. So if you have a VPN, you can use Bybit, and then I was just showing how to actually like set a trade and use the platform. Um, so yeah, that's what we're doing right now. Yeah, I like FTX a little bit better. I just know Bybit is a little bit more like lenient. It also has like the most liquidity, so I think it's more popular for like, yes, sir. So I think it's just a little bit more popular. So yeah. So yeah, give me a second. We'll hop into more questions or holler them out as we go through it. All right, David. My man, my man. Yeah. Well, that's like coming into the liquidity part that we were just speaking about. So as long as there's liquidity on the platform, you're usually not too big of an issue. Bybit has like really high, like a lot of liquidity, so there's usually no issue there. Now if you use an extreme amount of leverage, sometimes you do have an issue getting out of trade, right? Like if you use like 50x or 100x leverage, that means you're basically artificially taking on a bunch of extra contracts. And so when you use that much leverage, you get like a leverage meter. And I'll actually show it right here. So let's go ahead and put in this trade. We're going to open this long. So 529, 558 is the price we need to get to. Let's see if we can get there. Open long. And so you get this little pop-up here, order price, the amount, how much it's going to cost you, the value, including the leverage, your liquidation price. This is probably the most important. Remember, if this gold flag price gets to this number, then you automatically lose everything that you put into the trade. So be super aware of that, your liquidation price. And then this one, you know, good till canceled, take profit, blah, blah, blah. Okay, confirm. Okay, so now that that is submitted, we'll go down to the bottom left-hand side here, starting from the bottom. So now you'll have your positions tab. It'll show any current positions that you have open, right? Now, we don't have any positions open because that trade hasn't been filled yet. So we don't have any trades that are open right now. We have our closed P&L, so some trades that you've done before. Won some, lost some, right? Your active trades. So this is waiting. So it's actively waiting. So it's not an actual position yet because it hasn't been filled, but it's actively waiting to be filled. So your active tab, your conditional tab, which this is where your, after this gets filled, this is your conditional will be where your take profit and stop loss orders go. So under conditional, you'll see, oh, I have a stop loss order at, you know, XXX. I have a take profit order at XXX. You're filled. Oh, so we just got filled. All right, so you see that where it filled up here. And this just filled, so the same thing. You can see the timestamp on it. Just got filled 6:40, so right now. And then your order history. Obviously, you know, don't need to tell you guys what order history is. Okay, so now let's go back to positions. So this is what you'll see once your order gets filled, right? So now let's read it again now that we actually have an active filled position. So see active now says 0. Conditional, I actually thought that our take profit and stop loss would fall under here, but it looks like it doesn't. It's already just listed here, so we'll get to that in a second. All right, so contract name, Bitcoin. Quantity, just the amount of Bitcoin in the side of this trade. The value of this trade is the USD amount that we put in multiplied by 5 because we have a 5x multiplier on right there. Our entry price, 29,558. Cool. The mark price is the current price, so 29,614. Oh, wow. So look at that. We got filled really good on that one. So this candle, let's delete this. So this green candle is the one that we got filled on. It came right down, touched it, punched right back up. So as long as we can hold above here, should be looking decently. See how it works out. Okay, sorry, got a little sidetracked there. So mark price is just this number right here. Remember, the gold flag is your mark price. Remember, your positions are opened and closed, or at least, sorry, they're closed off of the mark price. So positions are closed off of the mark price. So be aware of that. Your liquidation price, we talked about that. Position margin. Okay, so your margin is how much you have put into the trade, right? So I've put in $23.70 of my $118.23. So I only put in 23 of that 118. And the rest of that is made up through my through my leverage here, my 5x leverage. So the way I can reduce my leverage and kind of lower that leverage, and in doing so, lowering my liquidation price, is I can add position margin. So when I add my position margin, it'll lower my liquidation price. So instead of being 23,794, it could go all the way, depending on how much I put in of the total value, it could go all the way, you know, down to like two to 5,000 or something like that, right? So I can come in here, I can say, hey, I want to put in another 20% of margin, and see it'll change my liquidation price to 19. Say I want to put in 100%, it'll change my liquidation price to 148, right? So just be aware of that. If you ever want to get out of a margin position, out of a highly leveraged position, you can add the margin in there, and then that'll help get you out. Or obviously you can close the trade too. Okay, daily realized Good question. Really good question. So, no, that is not the same as adding to your position. Adding to your position would be you coming back up here and you know, saying, okay, at this price again, I want to put in another $25 or another $10 or, you know, another $30, whatever the case may be. And then you would open another long and then that would just add it to it. When you're adding margin, you're only adding margin to take away from your leverage. So your margin is to help with your leverage and help with your liquidation prices. Yeah, well, like it'll help you stay in the trade longer, but also it'll be like you don't want to be super high leverage at all times. So maybe at first you want to be leveraged because you caught like a good part of the move, but now you caught like a good part of the move, so you want to de-risk a little bit. So you add a little bit more margin because, like, let's say if I go up, um, let's say the trade goes up and I'm on the upside and I'm winning and I'm up money in the trade. Well, I might want to reduce my margin on that trade, right? And I can reduce my margin. So let's say I'm up $50 on the trade and I have $50 of extra margin. Well, I can put that $50 in. Now I'm equally margined. Um, my leverage position, my liquidation position is 0, and I'm kind of routing the trade out from like where I'm already at. So it's really just to help manage your liquidation. Mm-hmm. Yep. Exactly. And then so this little pop-up says the leverage and margin applied to the position will affect your estimated liquidation price. So it's the biggest thing is your liquidation price. 1 second, drink this water. All right, cool. What else? So let's keep going through it really quick. Sorry, I gotta keep myself on track here. So Bitcoin is what we're trading. We're trading isolated 5x margin. Remember, isolated, not cross, because isolated deals with just this one trade. Cross deals with your entire account. Quantity 0.004 Bitcoin. That value is $118. Entry price, obvious. Mark price, we talked about what mark is. Liquidation, you know what that is. Position margin, how much of the total value of the trade you actually put in. So just remember that. Unrealized profit, daily realized and unrealized. Okay, so take profit and stop loss. This is a cool little tool here. Click this edit button. So we already entered these when we started the trade, but we hit this little edit button in case we want to change them. So I often change my stop losses because I usually move them up as I'm winning a trade. So remember, this trade was just like a very small example on the 1 minute chart. It's not a normal trade for me, but let's say that the trade, so we got in like right here. Excuse me. Sorry about that. So we got in right there. Say the trade is moving up. And right now we're up. Oh, come on. So 0.07% times that by 5. So we're up 0.21%. Now I can make my stop loss. I can just move it up with every level, right? So say we start trading. Grab this. Say we come back down here. Then we start trading like this for a minute. And then maybe I want to move my stop loss up to like right here in this area. Right, so that would move my stop loss up to 29,594. Okay, so this is obviously just for example, but let's grab here and say I want to move my stop loss. So say we're already moved up and I'm in the trade and I'm winning money. I don't want to give it all back, right? So if I'm looking at this and I'm looking at levels of where we might go, and I'm thinking, okay, we could trend higher, but if we do come back below, let's say this level here, if we come back below, so imagine that the red line is where the actual price is currently. Oh, looks like we're about to get stopped out. So imagine the red line is up here, and I say, okay, if we come back down below that line, I want to just go ahead and take profit right there. All right, that's going to be my take profit area right there. And so we got in here, and we would take our profit there. So let's see. That would give us 0.12 times 5, so about 0.5% profit. And so say I wanted to move my stop loss up to that. That's exactly what I would do. I would come in here. I would say not my take profit, but I would go to my stop loss, change that to 29, whatever it was, 900. Boom, confirm. And now my stop loss would be moved to that. So that's usually what I do as I'm winning a trade. I move my stop loss up and up and up, especially if I'm like really unsure about how if I'm not like super strong in the trade, if I don't, not very, very confident, I 100% always move my stop loss with the way the trend is trading. The trade is trending, sorry. Okay, let's go to more like a 15-minute chart here. Okay, so we got this wick down. These are daily highs. Boom. So the big level to get above is 29,734. So let's go back here. I think we got stopped. Did we get stopped out? Oh no, we're in profit still. What? 29,558. Okay. So the trade that I really, since we're in a downtrend, right? Now we're only on a 15-minute chart, so be aware, you know, you have to understand when you're looking at different time frames, it tells different stories. So it's not double talk. It's not saying, oh, well, you said this and now you're saying that. It's just that you get a different story depending on the time frame you're looking at. And let's run this up to here just to get an idea of what we're looking at. Okay, so the real short that I would want to take that's forming is the retest up here. So 29.60, enter the short up to 29.746 with my stop above the daily high, a little bit above it here. So does everyone feel confident, right? Now say you saw this setup and you like the way the setup, does everyone feel confident that they could say, you know, why? I'm trying to think of the way I should phrase this question, because it's more so doing with charting than it does with setting orders. But would everyone be able to come in here and set an order, right? If I was just like, all right, this is your first entry, this is your stop loss, and this is your take profit. Everyone feel like they could just go into Bybit and do that? No, that's fine if not. Anybody else? Yeah, let's go through it. Let's go through a couple of them. What's up, Rich? Yeah, on this one, we were saying we want to short, right? So this one was, so yeah, I was looking to go to the downside on that one. Now there are, let me turn 1 second. Sorry, this, yeah, yep, I'm recording, so I'll drop the link. Later, brother. Um, okay, yeah, so let me try to do it this way. So short. So there are, boom. So this shows it a little bit better. So if I want to get my short down to here, and I got my stop loss up here. So this is a good way to look at it as well, because what you want to try to do is you always want to you want to make sure your risk to reward is worth it. So on this side, right, now I'm just taking measurements here, but I'm going to measure from my entry going this way. If I got stopped out, I would lose, you know, 0.5%. And then let's see, if I was right on the trade, I would make 0.8%. So this is like a 2-to-1, about a 2-to-1 ratio trade, right? Because I'm going to make 0.8 and I'm going to lose about 0.4, right? So it's 2-to-1. I possibly am going to win 2 times the amount of what I could possibly lose, right? Now, how else could I look at that? Now, You're not always going to take a trade that's 2-to-1. You're not always just going to say, oh, I want to take this trade because it's 2-to-1. That's not the best odds. You want to give yourself really good odds. So you want to give yourself the best setup possible, right? So let's say that Bitcoin, let me clear these drawings, remove drawings. And let's say that we had a huge push up all the way up to like right here, right? And that would make sense. These are our other highs, and we're going to mark these highs down to this low. And this would be our area of interest to short. Do any of you guys know why this is an area of interest to short right here, this yellow box that I just drew? Well, yep. Well, we had this big drawdown right here, right? So drew just down, just cascaded. Yeah, yep. It's where we capitulated last, so it creates an imbalance, right? An inefficiency. So we're eventually going to come up and fill this inefficiency. So we broke down, we finally bottomed here, and then we accumulated here. So this was a little bit of accumulation here, and we started moving back to the upside. We couldn't break out of here. So now, well, first we're waiting to see if we can get above that. But let's say we do get above that and we run all the way back up to this yellow box. This would be a big level of resistance, because this was where we failed previously. This was the capitulation level previously. So now it's going to be resistance, right? Because we are below that line, it is resistance. So we would want to short right there when we get up to that resistance level. And then if we're looking to take profit, we want to take profit on this comeback down and this test of this level right here. So these would be the two little levels I would be looking to push up through. And now I drew that out to talk about the risk and reward, right? Because on this one, where would my stop loss be? Right above these highs. That's where my stop loss would be. Where would my take profit be? Again, this is a short. My take profit would be down in this box. And where would my entry be? My entry would be right here. And now when we run that same, let's see what type of we get here. So boom, we'll run this up a bit to there, and we'll run our take profits all the way down to about here. And now you can see our risk to reward is a little bit better. 1.9. So a little bit better risk to reward. I'm not sure what the last one was. It was like 0.8, 0.2, something like that. So 2 over 0.2 is a little bit better. And then obviously this is on a 15-minute chart. The higher time frames you get, the more of those moves you'll start to see. So let's go ahead and remove those drawings again. Now this is on the 4-hour, but it's the same thing. It's the same type of setups that we're looking for, right? So we can do the same look that we just did on that 15. Same idea here. Let's grab this. This is our capitulation area. We came down here. Oops. To the top of those candles. Same thing on this 4-hour time frame. This is where we're going to look to take profits on a move to this upside. We want to short there and catch the rollover, close there, right? We just want to try to get winning trades. So let's go back in here and see how our trade's doing. We're up 0.1%, so not that great. I'm surprised we haven't moved to either side yet. Okay, let's set a few more orders. So that was the limit order. So that's when we already know the price we want to set it at. So that's when we came in here and we said, hey, we want to buy it. You know, we want to wait to buy it when it gets to X amount of price. So let's do a daily. Wow, this daily chart. April 20th, huh? All right, so you can see this consolidation, right? This is a big consolidation. It's just been sitting on this line over the past 25 days, almost a month. It's just been sitting there. And what's the area that we need to retest? It's going to be this area right here. retest that to the upside. And now we're looking back for confluence. Remember, confluence is when we're trying to find something that gives us an indication that what we're looking at is working. So if we're calling this support because it spent 25 days just chilling there, let's see if we can see that anywhere else. And we look back, we can see it tried to touch down here as support previously, held back here as support previously, so that makes sense. That's good confluence. We would want to put in, so let's say now we're operating off the assumption that this support is going to hold, that we think this is a good support, right? So then we're going to go ahead and put our buy order at the bottom of this support, which is about 28,600 with a stop loss under our wicks down here. So stop loss under these wicks. And our take profit, we can do a small take profit or a large one. Now this is a long. Now we're putting on a long example, right? So here's our stop loss right here, lined up right there. And our take profit, if we go to the top of this box, this will be our first take profit actually, which will be top of this box. And our last take profit would be the top here. And now look at this risk to reward ratio, 4-to-1, right? So how did we turn the risk to reward ratio into our favor? Well, we looked at a little bit of the macro we saw on the daily. We saw that we've had support here previously. We've reduced our risk because we're not buying right now. So a market order means that you just buy it whatever the market price is. Similar to when you go to a restaurant and you want the lobster and they say, oh, well, the lobster is market price. You say, well, what's the market price today? I don't care. I'm buying it today, whatever it is. Same thing with Bitcoin. When you're putting in a market order, this middle one, you're just buying whatever the current price is, whatever the market tells you to pay. That's the price that you want to buy it at. With a limit order, you're putting in a specific limit that you're willing to pay, right? So if we're looking at this, the limit order we're willing to pay here is, remember this 28,606. So we come here, we got a limit order set, and that was for 28,606, but we're actually going to do 28,650 because maybe we get front run, right? We don't got to be super greedy. It doesn't have to be perfect. So 28,650, we're going to put down 30 bucks. We're going to buy along with the take profit and the stop loss. Our stop loss, 25,800, we'll call it 25,800. So stop loss, 25,800. And then, oops. And then our take profit. Let's be a little more conservative here. 34,140. So 34,140. And it actually gives you your estimate. So if the trade works out and you take profit, you'll make $28. If you lose the trade, you'll make 14. And when we go back to here, so if we take all the way at the top profit, it's a 4-to-1 ratio, 4-to-1 risk reward. And if we take our bottom profit, it's a 2, closer to 2-to-1. So just be aware of that, right? Well, whatever your leverage is, you multiply that to, the percentage here. So for example, if this went up from here to here, 18%, it would really be multiplied by 5 because you have the 5x leverage on there. Right? So the same goes for this way. So instead of that being minus 10%, it'd be minus 45% of the trade. So you'll still get stopped out at these dollar levels, but it's just increasing your margin capital, right? So it's saying instead of you betting your $30 for this trade, if you have a 10x leverage, you're betting $300, right? So you're going to get paid out as if you had 300, but you're also losing that amount. You're not losing the 300, but you're losing the percentage that it would be. So 10% of 300, would be the $30. Yep. Yes, sir. So if you do want to play around before you put in your trade, you can always click on your calculator here, go over your profit loss, your target prices, your liquidation prices, and your entry prices. And then, you can kind of play around with that. Like, okay, if I want to go long, I'm using 10x leverage. I'm going to trade 1 Bitcoin and my entry price is going to be $20,000. And I want a 50% return on investment. Entry price 29. Oh, no, that didn't work. I don't know how these two are different, but yeah, you can play around with that calculator as well. But the biggest thing on here is understanding, once you have an active order, how to manage this part, and then obviously how to put in an order. Those are the two biggest things that you need to understand. So let's go ahead and put in a few more orders just to kind of get it down and make it easier. So let's pull up ETH. Let's just remove everything. All right, support. We're at support right now. This downtrend is super serious. Let's just go from this little peak point. All right, so let's go ahead and assume that ETH does get a bounce. So we're going to long here along this bottom part. We're going to look to take profit at this first golden level right there with our stop loss right underneath here. So this is good. This is like a super tight stop loss. And on these, sometimes, you want to be aware that, like I said, the liquidity runs can happen where they'll send the price down really quick just to stop you out before moving back up. So sometimes I don't actually keep my stop loss set on these, especially if I'm just watching. I'll just watch the trade play out and see if I need to get out of it or not. But all right, so let's go ahead and just practice putting this in. Okay, so if I'm going to put in this order right here and the current price is 1761 and I want to pay 1731, am I putting in a limit order or a market order? If the current price is 1763 and I want to pay 1731, would I do a limit order or a market order? Exactly. Yep. Remember, a limit order is going to let me pay the price I want to pay. A market order is just saying, hey, whatever the market is paying, I'll pay that. So the current price is 1763. So that's the market price. That's whatever the market is paying. But I want to pay 1731. So when I come to put in my order, I got to make sure I'm on limit, right? Well, first I need to make sure I'm on Ethereum too, if I'm trading Ethereum. So we switch over to Ethereum. And now I make sure I'm on limit. And then I check up here. Look, I'm on cross and I'm on 10. That's not what I want to be on. So every time I change different assets, it's going to tell me I'm going to have to change this, right? So let's be aware of that. So I'm going to Ethereum. I'm going to say no to cross. Remember, when you're doing margin, you always want to be on leverage. When you're doing leverage, you always want to be on isolated. I'm going to move this down to 5 and 5. Okay, so the first part's taken care of. We're on Ethereum. We know the current price. We changed our leverage. We changed the isolated. We know that we want a limit order. We know the price we want to pay, which is 1731. We know that we want to put up, let's just say $20. We know that we are going to buy long. And so remember, you can do long or short right here, but we're, just for this example, we're doing long. We know our profit. We want to take profit at 25.13. So our profit is 25.13. We know our stop loss is 16.47. 16.47. Oops. And then we would just hit open long. So, all right. Yep. So when you're trading, it'll tell you right from the gate. So I think you hopped in just a little bit late. So when we're on these derivatives, you see where it says USDT perpetuals means that we're trading in USDT. If it's inverse, perpetuals, then you're trading in that currency. So inverse means you would be trading in Ethereum. USDT means you would be trading in USDT, right? So, well, what you're paid out in, but also what you have to start the trade. Mm-hmm. Yep. So yeah, I think you were a little bit late too, David. So when we first started, we talked about as soon as you sign up, after you have your VPN and you sign up, you come up here to buy crypto, but you actually hit crypto deposit. And when you hit that crypto deposit, it'll bring you here, and you can deposit different cryptos into the account, right? So you can just say, say you can send Bitcoin from Coinbase or Ethereum from Coinbase, Solana from Coinbase, whatever. So you send it in here, and then that's how you get money to your account. And then once it's in here, you can swap it for USDT or whatever the case, and then you can go back to the derivatives trading platform. Um, all right, good. Okay, so let's get back to this really quick. So, okay, we set our order. 1731 was our buy. 1647 was our stop. 2513 was our take profit. And then now let's just double check on our order book over here. So we are going, just read it from the top to bottom. So when you're trading, it's always better to go slow, because trust me, first off, if you haven't read Trading in the Zone by Mark Douglas, I would suggest reading that. As far as your emotions go, it helps a lot. But secondly, you feel like when you're about to put it on trade, you feel like you got to be like, it has to be right now. Like, oh, like I'm going to miss something. If I don't click this button right away, I'm going to miss something. And that's like what you don't want. That's the anxiety and angst built up that's going to cause you to make mistakes. Like, you much rather be like, very like zen, like, okay, let me just double check, let me make sure I have this where I want it to be. Do I have my stop before you actually put the trade on? If your mind is that scattered, like, oh, I got to get in right now, then you probably shouldn't take the trade at all, right? You want to trade. This is how you want to be trading. You want to be able to look at it, have your thesis develop. You're saying, okay, well, this makes sense. Just very calm, just easy going. So that way you can kind of be clear-minded when you're putting it on. And if something doesn't work in your favor, you can do the opposite, right? You can get out of the trade or close the trade or whatever you need to do. But when you're like manic almost, it really affects how you trade. So again, really quick from top to bottom, we have isolated, perfect 5x leverage. Okay, we're going to open a position, which makes sense, right? We're going to open a position. Now you can put it up to 100x if you want, but I just you gotta be super careful, super careful, because what happens is when you change that leverage, you get liquidated a lot quicker. And why do you get liquidated? Because you don't have the margin, right? Your position margin. So your liquidation rate, like how long it takes for you to get liquidated, it happens a lot quicker when you don't have that. So just be aware of that. Okay, so we have isolated 5x. We're going to open a position, and remember, we're doing limit. So if I want to buy Ethereum for the current price that it is right now, do I do limit or market? Hey, exactly, right? If I want it for the market price, if I want to pay whatever the price is right now, I do market. But since we're smart and we're patient, we most of the time would want to do limits, right? So we're going to limit. We're going to set the limit that we're willing to pay. Okay, so we're doing a limit. The order amount, or the order price that we'll pay, is 1731. Cool. How much are we willing to put up? 20 bucks. We're going to buy along. Our take profit was something like 2,500. Our stop loss was something like 1690 or something. I don't know. All right, cool. And so for this specific trade, I'm going to put up. So if this trade works out, I would make $800. And if it doesn't work out, I would lose $47. So the risk to reward here is high in my favor. But you can see the reason why is because right here, if I were to go long right here at this position, and yeah, you can hold these futures contracts open for as long as that, as long as you have margin in your account, but you do pay that funding fee every 8 hours. It it's actually not too much. The funding fees actually don't usually equate to too much, so it's usually not that bad, honestly. Like like 50 cents, a couple dollars, nothing crazy. Like I've had like a every 8 hours, yeah. But I've had a futures trade open for like 3 weeks before. I ended up paying after all the fees were done. I ended up paying like $35 in fees, which was a lot, but I made a good amount of money on the trade, so I wasn't, at $35 wasn't nothing at the time. I was like, yeah, go ahead, take that. Ain't tripping me none. But okay, so okay, it's limit, boom, 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 boom. All right, and so a little bit more on managing your positions in here. I forgot about this bar slides to the right. So this bar slides to the right. So when you slide it all the way over, after your take profit and stop loss, you have something called a trailing stop, which is the same type what we were talking about before. How I was like, oh, I'll kind of use like a trailing stop order. So like let's say, so stop loss order will be. What are you saying? Yeah, exactly. So that's what like I'll normally like I was saying earlier, I will manually do a trailing stop, right? Like I'll just follow the price. So for example, if I would have if someone was doing a trailing stop, say they entered here and the price was going up from here and the price was going up and up and up, what they would do is say, okay, so I entered here and my stop loss originally was right here and my take profit was up here. And so as the price kept going up and up and up, so my entry, so I got my entry, so I'm gonna delete that, and my stop loss is here. And so as this green bar is going up and up and up, I just move my stop loss up with it, up with it, up with it, up with it, up with it. And when it comes back down and it hits my stop loss, well, I may not have made all the money all the way up to here, but I got to take it from here all the way up to here with zero risk, right? Because my stop loss was just steadily moving up as the price was moving up. So trailing stops can be super helpful. And then the last thing was this ADL. So your ADL light represents your leverage. So if your ADL light is all the way lit, then you are most likely going to get liquidated. It means that, so if this ADL light is all the way up, it means that you are like first in line to get liquidated, right? Because you're using so much leverage. It indicates your priority in the queue, as I'm reading right here. Each light represents a 20% increment to the next percentile. So if all lights are lit, your position is in the top percentile. So the top percentile meaning that it's like the next one to get liquidated. So you want to keep this light low. So, all right. So here's another quick pop quiz for the people that are paying attention. If your ADL light is high, meaning that you are in chance of getting liquidated, what would you do to lower your ADL light? Add margin. Exactly. So right here where we have our margin position, right? Remember, you can hit your edit margin position. So if your ADL light is way up and you want to stay in the trade, you could also always close the trade, right? You could close the trade and then you don't have to worry about it. But like if you want to stay in the trade and whatever, you would just come over here, position margin, add to your position margin, right? Maybe add 50% of what the current amount is. Maybe you add 100% of what the current amount is. You have to decide. But that'll reduce your leverage, and then that way, it'll reduce your liquidation and how close you are to getting liquidated. So just something to be aware of. Uh-oh. Yep. What's up? Yep, they sure do. Okay, so we got stopped out on our trade. So we automatically got the position closed. We didn't have to worry about anything. We lost a couple cents or something like that. Let's go to our. So cool. So this was the last trade that we put in. Close long. Filled. So the status was filled. The market order. Close long. Anything under this price was the trigger price. And there you go. Okay, so let's go through here. Let's switch back to Ethereum really quick. And I want to practice. Let's put in like just 2 more like practice trades just to kind of really get putting in the orders, because that's, like I said, that's like one of the biggest things. So let's remove all these drawings. All right. Now we're watching this and we're saying we're not sure what's going to happen. So we just got a couple of these in here. Boom. So we've also talked about those wicks coming down. Like I've had buy or limit orders set on wicks, right? So let's just say we think we're going to get a capitulation, and we think that this line, and we can see it kind of pretty clearly here. You can see where it bounces here. 1, 2, 3, 4, 5. So let's say that we don't know if we're going to get a bounce here, but we want to just set an order for down here. So I would set my buy order right here. And if I'm setting a buy order right here, is this a limit or a market order? Perfect. Exactly. So I would set my limit order for down here. And then let's say I just think that it's going to do something like this, where the price is going to come down for a bit, come down, fill our order, play around, and then at least come back up to here, right? So I could just set that trade to go something like this, where I got my take profit right there, and and I got my stop right under here, and it's a 4 to 1 trade, almost 5 to 1 trade, right? And this was just looking at these levels. And now say I just want to take $25 out to do this. So I don't know when this is going to happen, but let's just say that I think the market is a little shaky, and I do think we're going to get a bounce. Now, first things I would warn is that, you never really want to fight the trend, which I've had a problem doing in the past, because I'm just an optimistic person, right? I'm always thinking the best of things. And so you want the best to happen, but like if we're trending down like this, looks like maybe we're going to continue trending down like that. So this is one trade idea. So this is just giving us ideas. So on this idea, we would come down and we would long right here. But let's say that doesn't happen. And let's say something like this happens. We start moving back to the upside here. And now I want to go short right here. And so now I'm using this line down here, this 1300, right down here, this little pause that we had. I'm using that as my take profit. I'm using that as my target. So now we're going to flip to being short. So we're going to switch this. Our entry is going to be right here. We're going to look to come all the way down to here. And our stop loss is just going to be a little bit above this breakout. So we're going to say that we're not going to break above this yellow line. And if we do break above this yellow line, I'm looking back towards what happened over here, right? I want to check this area out as my area of interest. These little candles right here. I want to see that these candles right here basically hold as another resistance level. So let me draw this a little bit better. Give me 1 second. Move this, and we'll take these right here. All right, so we see we came down, we broke it, and then we kind of bounced there. So I'm going to say anything above 23.85. Sorry. Let me put this 24. Let's call it 2,500. Make it an even number. So this will be moved to 2,500. So my stop loss is at 2,500. My entry is at 23.85, and my take profit. My take profit 1 would be probably like here. And my take profit 2 would be like right here. Okay, so now we just go enter this short position. right? And the reason being because we think we're still trending down. Anything that pops up is going to be a higher low. So unless we get above 3,600, anything that, if we don't get above 3,600, it's technically a higher low. And a higher low just means we're going to continue to the downside. So that would be my thesis here to set up this trade. And so obviously we're a ways away from that price of 23.85, but we can still put it in. So we come here, and remember, the same, we're going to set it up the same way, except we're just going to hit open short this time. So isolated, yep. And what leverage are we using? 5, that's fine. And the price was let's call it 2,300, and we're gonna, let's just say, put in $100, and we are gonna sell short, right? Instead of buy long, we're selling short with take profit and stop loss. Our take profit was 1,700 for our first one, and our stop loss was 2,500, around there. Okay, and then we would just hit open short. Oh, well, let's not do 100 then. Let's do 25. I don't have 100 in here right now. Open short. And then we get our pop-up here. Order price, the amount, the cost, the value, liquidation, profit, boom, confirm. And now we can just have a bunch of these orders sitting in here waiting to get filled. Well, as long as we have the funds in our account. So not too hard, not too hard. It does take a little while to get used to, but it's definitely not the hardest thing. Okay, so that's setting our orders. So we went over how the platform, like just the layout of the platform, how to set the orders on the platform. Obviously, I'm not saying just come on here, do 100x leverage, hot, long and short. Trading is difficult. And when you see profits in trading, you have to take profits in trading. And you also don't want to over leverage yourself because it's easy to get stopped out that way. So, you have to give yourself a chance. So do be mindful of that. And then as we go through, we'll just look up some trading types, like some trading styles, like patterns, for example, like whether you're trading like a double top, or you're trading like a head and shoulders, or whether you're trading down on like the 15-minute chart, So trading on the 15-minute is going to be different than trading on like the 4-hour, which is kind of like what I like to trade on. But essentially, it's still the same thing. You still have support and demand zones, and that's really the name of the game. We got support coming in right here with resistance right here. So between these two lines, right? And this is obviously just over the past 15 minutes. But why do I say that? Because you can see this is where we started to break down. So we were, let's see here. We were leveled off right here for a bit. We had tried to level off again right here for a bit. Ultimately, we couldn't hold it though. And we just broke down. We tried to level off here for a bit. Right, so we're just breaking down. But what's the general levels that we're looking at? Get rid of those. In general, we held right here, and then we got rejected when we came back to this top side. So right now, I'm just watching this level to see what happens. If we can get a bounce right back here, and then move to the upside, see if we can test right there. That's kind of what I'd be looking for in like the short term, like on a 15-minute chart like this, right? So what would I do? My buy, my stop loss underneath of this wick, a little bit lower, and then my take profit, boom, right there. So 1744, 1729, 1814. I can come right over here. I'm actually going to go long. So let's say I just want to do a market buy. I don't care what the price is. I'm just so excited. I just got to get in right this second. My take profit, 1814, 1729. So market buy, 1814 was my take profit. And 17 like 49 or something. So I stop loss, and then boom, open long, open short, whatever the case may be. So not too crazy, but that's like how you get started with everything. We'll kind of keep going through this because I'm a little torn in sharing it and showing it, because like to be completely honest, I lost about like $8,000 before I really started to get the hang of trading. And I don't necessarily want anyone to go through that, because you can paper trade, right? You can do these trades without putting up, real dollars in paper trade. But it doesn't elicit the emotion that comes into trading. So trading with real dollars does help, in my opinion. But you do need to be just mindful of it, because you know you can, if you treat it like gambling, you know, it's gambling. So something to be aware of. All right, guys, but that's all. I'm gonna go ahead and stop the recording. So anybody that caught the recording, holler at me in the playback. We can get with you there.